So, do you remember when you had to actually physically drive to your bank and talk with a teller so that you could manage your checking account or your savings account? I mean, some people, you might not even remember those days because it was so long ago. Or even better, some of you have never had to do that ever. Because now banking's as simple as just pulling out your phone and opening up an app, right? Almost every bank, whether it's national, or local, or traditional, or even a credit union, they have an online platform for their customers, right? And everything has gotten so high tech that some banks don't have buildings. And that's what we're talking about today. We're talking about the Neobank, right? Now, if you've been thinking about checking out a Neobank, Chime, Current, Varo Bank, you're not alone. More than 14 million Americans say they currently have a neobank account, and that number's only going to go up. But you might be asking, what is a neobank? How does a neobank even work? And what makes them different from a regular bank? Why would you want to use them? Okay, good questions. Let's start with that first one. What is a neobank? All right, well, simply put, a neobank is a simpler version of a regular bank that runs entirely online. They have all the basic offerings of your typical bank: checking, savings, debit cards. Some of them even offer checkbooks. And I know what you're thinking. If it looks like a bank, if it acts like a bank, it's a bank. No. A neobank technically isn't a bank at all. That's because neobanks are not chartered with state or federal regulators, right? In other words, they don't have to follow all those rules that banks have to follow. Neobanks also typically don't offer any type of credit or loan programs, which is not necessarily a bad thing. So, if they're not banks, what are they? Well, by definition, neobanks are fintech, financial technology firms that offer apps, software, and other high tech ways to virtually manage your money. That makes them attractive to tech savvy people who appreciate a better digital experience and don't want to go through, a brick and mortar banking location. And because the two often get confused, go ahead and say that neobanks are different from challenger banks. Right? Challenger banks are chartered and some even keep brick and mortar locations, while neobanks are strictly online. Right? So now that we've talked about all that, let's talk about some logistics. How do these neobanks even work? Well, to the average customer, neobanks probably don't seem that much different from any other mobile banking app. The most notable difference is that neobanks are much easier to set up. I mean, seriously, all you have to do is download the app, make yourself an account, and you're good to go. You got yourself a neobank account, right? No paperwork, no meeting a representative, they're not going to check your credit, and this is all on your phone, or you could do it on your computer, and it only takes just a few minutes of your time. Another way neobanks try to stand out from traditional banks is by claiming to offer their customers more savings, higher interest rates, and fewer fees because of their branchless model. But to offer bank-like services and financial security, neobanks actually have to partner with traditional banks. Okay, well then, what are the pros and cons of your reasoning of why I might want to do this or might not? Okay, well, there's a lot of things to like about neobanks, but I understand that they're not going to be for everybody. So let's see how they compare to traditional banks. So some of the pros that we're going to deal with here: lower costs, right? Because neobanks don't have physical locations, they're going to have fewer operating costs. And they're able to pass those savings on to their customers by offering low or basically no monthly fees to keep your account up and running. It's a pretty good win right there. Well, then they've also got higher interest rates. Again, because of low overhead costs, right? So neobanks tend to offer these higher interest rates to their customers. Think of, okay, an example would be Bank of America offers regular savings accounts with only a 0.01% interest rate, Some neobanks offer a high yield savings account with up to 0.5% interest rates. That's that's a big difference. I mean, still small numbers, but big difference. Then we have convenience. While traditional banks are restricted to certain hours and locations, neobanks are available 24/7 because everything is accessed on an app on your phone or on your computer. So, you know, more fee free ATMs in more places, no more searching for the nearest bank with a 24-hour ATM, or worse, having to pay a ridiculous fee for using whatever ATM is actually closest to you. Most neobanks partner with networks to offer fee free deposits at thousands of ATMs that are found at places where you're probably already running errands. So then we've got the cons. Well, no physical branches or in person customer service. Sure, the convenience of an online bank is great, but sometimes people want to be helped in person, especially if they're dealing with something tricky. Now, while I can't speak for the customer support experience of any specific neobank, right? I'm sure you've all felt the frustration of trying to reach a helpful customer service representative over the phone, right? And then cue the 10, 15, 20, 30 hour long music on the phone, just, right? Aggravating. Now, fewer accounts and services available. Well, you gotta love that neobanks don't offer loans, but that also means they can't help you with a mortgage, right? A lot of neobanks also won't let you open a separate business account. Another con: no overhead regulations. Right? Now, I'm not really going to say this is a con, but maybe more of a buyer beware. Right? Don't think it's a bad thing that neobanks aren't chartered with the government, but it does mean you'll have to do a little extra homework to make sure your money's safe. So, a little advice: before you sign up for a neobank account, make sure you see the letters FDIC. Right? Now, that's going to stand for the Federal Deposit Insurance Corporation. This is going to protect you so that if that neobank you're using goes down, your money doesn't go down with it. Okay? So, at the end of all this, should you use a neobank? Well, let's be honest with you. I'm kind of a big fan of neobanks. Traditional banks have been slamming people with fees and credit card offers for way too long. They profit off of driving people into debt, and that's just not good. So, this is why neobanks are great. A neobank is a simple, secure place where you can store your money without fees or complications, or at least they should be. But not all neobanks are created equal. So make sure you guys do the research. If you're going to go for a neobank, do the research for one that's good for you, right? Each person has their own situation, different from another one, okay? So hopefully you guys, this is going to put you down the right track if this is something you're looking for, give you some good information, right? If you like that video, hit that thumbs up button. If you're not subscribed to the channel, I'd appreciate if you did. But until I see you guys in the next one, y'all be safe.